Hello, everyone, and welcome back to the Pulse here with the PeakBot team. I am your co-founder and co-host, Dylan, joined by co-founder and co-host, Ben. Ben, how you doing this morning?
Doing good. Football kicked off in the States over this past weekend, so I am a Giants fan, unfortunately. I will continue to be a Giants fan throughout this entire season. It'll be rough, but I'll have to find a secondary team. But Dylan, how was your weekend?
Well, as far as football goes, Jets are still undefeated. No, they haven't played yet. They'll play tonight. We'll see how that goes. But yeah, as for the Giants fans out there, not fun. Getting beat up by Sam Darnold in any situation, right?
No.
He played really well too.
He looked good.
He
looked really good.
Couldn't do it for the Jets. But we knew that would be the case. So, no, excellent. Everything's good here. Excited to get back into another week of trading. The weather has shifted here in northern New Jersey. Ben's representing the hoodie weather pretty well, honestly, right now.
It is a short sleeve hoodie though, so it's like right between. It's. I'm not quite ready for cold, but I'm not warm anymore.
Okay, so you're in your Belichick era right now with the short sleeve hoodie.
You could say that.
Excellent. Well, today for our show, we have a number of things to go through. For anybody who's not familiar, PeakBot is an automated trading platform built for the everyday retail trader. We make it easy, affordable, and transparent to put a stock trader in your pocket. Hands-free trading. We take well-known option selling strategies that have been around for decades, and we build them into an automated trading strategy for you. So today, Ben, we will be taking a look at our PeakBot picks from last week. I think we mentioned this on Friday's show. We're going to be making the picks today.
No, we're making the picks on Fridays.
Making the picks on Fridays for the following week. That's right. Okay. So good. Pressure's off.
Yep.
So we'll take a look at how we did last week. Again, I was, on quite a comeback. I think I had taken you 3 weeks in a row. We'll see if I did it for a fourth. Of course, as you can see on the screen below, Tradier Summit, our great broker partners over at Tradier, are hosting their, I don't know what annual summit this is, how many they've done, but it's on September 18th. Starts at 10:30 a.m. Eastern. Ben and I are going to be talking live on the Tradier Summit at 1:15 p.m. Eastern that day to discuss, do automated trading bots work during major market events? And as you can see, we pulled up on the screen here some heavy hitters that we are joined by, quite honestly. But yeah, Ben and I will be chatting, are trading bots effective during major market events? We'll talk about the expected market events, earnings, FOMC, elections, etc., versus the unexpected market events, COVID, the GameStop rally, etc. So September 18th, 10:30 to 4, it's a full day. Going to be a lot of great speakers, but make sure you tune in at 1:15 p.m. Eastern time to check out the PeakBot crew. So, excellent. We're going to take a look at PeakBot picks. We should take a look at the watch list. We can maybe do an analysis on how we feel about the market this week. Still need to, we don't need to do this live, but we can if we have time. I still have to set my portfolio. I have some wheel trades that are moving over, but I want to take a look at Iron Condor and trend spread. And we'll go from there. So as always, if there are questions, please do not hesitate to put them in the comments. You can also text us. We'll get a number up on screen here in just a little bit. Go to our website, use peakbot.com. Whatever you need, we're here to help. So Ben, what else do we want to discuss here today?
Let's get into our picks, and then we do have updates to the watch list to be sharing, and then maybe some reminder for those trading the wheel. If you did get assigned, Dylan, I think you did get assigned, so we could talk through that whole scenario. But why don't we go ahead? I'll share my screen, and then Dylan, why don't you go ahead and read through our picks, and we'll determine who 1 PeakBot picks from
I
last
have
week.
good news. I have good news for you. I've already done that.
Oh, you don't want to do it live?
Well, I've done it. I figured I'd save us some time. We can.
Okay.
You want to do it live? I have the graphic ready. I know who won. You wanna? do you wanna? What do you want to do? Let's go through it live.
I like going through it live. I like taking a look
Okay.
at the prices.
All right.
I like talking about it.
Do we want the people to know who won or wait?
Well, just start here. Did Thomas win?
No, we didn't even have picks for Thomas last week.
Okay, yeah. So then it's just me. Yeah, so let's go through the picks quickly.
All right, here we go. Yours first or mine?
Let's do mine.
We're going to go with yours. All right, so Ben last week had 5 selections. These are all credit spreads that were selected on the 3rd, set to expire on the 6th. So it was Tuesday to Friday. Let me confirm that that's correct. Yeah, Tuesday to Friday. And he had 2 bullish put credit spreads, 3 bearish call credit spreads. We're going to start with the puts first. Ticker RUN, Sunrun. You collected $18 in premium with $150 in cash. You were trying to stay above 19.5.
Did not stay above 19.5.
Not so hot. Okay. Ticker TMF, which is an ETF, I believe. I forget for what. Bullish. You collected $30 in premium with a $2 spread. You were trying to stay above 53.5.
And it did.
Nice.
TMF is an ETF for treasury bills, 20-year treasury bills.
Okay. Very cool. All right. So 1 for 2 right now. 1 for 2. We're going to go now. We're going to flip over to the bear side of things. You're trying to stay below your strike prices now. We're going to start with UVXY, another ETF, I believe, for the VIX. So bearish, you earned $33 in premium. It was a $6 spread, and you were trying to stay below 24.
Below 24. Whew. It's going to be tough to do in this market. I don't know if I would take another bearish position on this ticker.
Tough.
Yeah. This one might have actually flipped to bullish this week. We'll have to take a look when we look at the watch list. All
right, let's make sure we remember to do that. Okay, so 1 for 3. You're gonna need the rest of these to be able to compete, I would imagine. All right, so ticker Marathon Digital, MARA. It was a call credit spread. You earned 13 in premium on a $1.50 spread. You were trying to stay below 18. Very much so. What a ridiculous stock. Yeah, crazy, out of control. But you did it. I try to stay away from that stock. I have scar tissue. I was trading that on the unhedged wheel in like end of 22, early 23, and I got assigned shares and I got burnt. Okay, not about me. So you are now 2 for 4. And we're going into our last one here. And you had a call credit spread bearish on Coinbase, ticker COIN, coin. You collected 171 in premium. It was a $12.50 spread. And you were trying to stay below 192.5, which I think this is going to be comical. Yeah.
Wow. Look at that.
When we looked at this on Friday, I think at the time you made the selection, it was right around like 190.
It was like, yeah, right around. What was the day? It was.
I think we did this on the 3rd.
Yep, it was right around here.
Yeah,
180-ish.
All right. So, yeah.
All right, so I went 3 for 5. Not the best showing.
Not the best, but that's okay. Let's go into Dillon. When we were taking a look at mine on Friday before the market closed, I was 4 for 5 then. Let's see how it held up. All right, so I also had 2 bulls, 3 bears, all credit spreads. Again, these are PeakBot picks. I took 2 of my picks that I'm about to announce. One that won, one that I think lost. Here we go. Cassava Sciences, ticker SAVA. I had a put credit spread expiring Friday. I earned $38 in premium on a $3 spread, trying to stay above 26.50.
Ooh,
and we did it.
just squeaked that out. And pre-market, we're up a little bit more too. So
Okay, I can take that. Oh, big swing there. This is what chart is this? Oh, all right. They got a lot of action in the last few months here, huh?
they sure do.
I had no idea what this business was, but it found its way on our wheel watch list like 2 years ago, and it's always in the mix now. Okay, this next trade I took, ticker AFRM. I was bullish on it. I earned 44 in premium on a $2.50 spread, pardon me, and I was trying to stay above the $42 strike price, which I did not.
You do not.
No, that one sucked. Took that trade, took a loss. I think.
Did you trade that on the wheel or on trend spread?
I was on trend spread.
Okay.
So I think I took my max loss there. I believe we closed below my bought call. So that's okay. Still earned premium. Next one, we got we're going bearish now. Call credit spreads. This one was on INTC last Tuesday, expired last Friday, earned 17 in premium on a $1.50 spread. I was trying to stay below $23, which we very much did. Big drop there. Well, actually, that was earlier in August. We saw a huge drop.
But that was earnings.
Okay. But
yes. This is why Dylan and I, not financial advice, but this is why Dylan and I always say we don't want to trade earnings. Not enough upside for us as option sellers to go out of our way to trade earnings, because something like that could happen. And you could just, in the matter of a day, take your entire max loss, and that's it.
Yeah.
Not fun when that happens.
No, but I won that trade. I took that trade. I won that trade. Love it. Okay. So I am 2 for 3 right now. If I win out on these last two, I'll take it. So we're going bearish. DraftKings. 'Tis the season. Okay. It is sports gambling season. All right. So my lucky number. All right. This was a call credit spread. I earned $20 in premium on a $1.50 spread. I was trying to stay below 36, and I did.
You did.
Yes.
I would expect the trend, like what you just said, I would expect the trend to change from bearish to bullish over these next couple of weeks for DraftKings.
And all the well, I was going to say all other publicly traded, sports books or casino, like Penn, I would imagine they go up. I don't know what other ones. It's like MGM's got to be public, right?
I think so. Yeah.
Okay. So yeah, definitely see that trend switching. And by the way, while we're talking sports, football, stocks, for all of you sports bettors out there who haven't had the best luck, which is most of you statistically, not saying quit it. I'm just saying take some of that cash and put it in a PeakBot account. Create a Tradier Pro account. Just start collecting rent. Let this support your failing sports betting hobby, right? So anyway, last pick, ticker Micron, MU. So I was bearish on it. Don't pull it up yet.
Nope.
I earned $43 in premium on a call credit spread. It was a $4 spread. My sold call that I was trying to stay below was $100. Now, if I take this, I win. The weekly record was already, I was up 3-2. You were 2-3. By the way, you started 2-0.
Yep.
I'm on a heater.
I'm on a cold streak, that's for sure.
3, almost, maybe as soon as you hit the enter bar, maybe 4 weeks in a row. Let's see.
The best I could hope for is a push here. So.
Which is, it's horrible.
What's the number?
Lucky 100.
Based on your attitude and mood right now, I'd say that you probably won this. Yeah, wow, look at that.
Way under. Let's look at what this stock did. Go to the 5-day.
Well, hold on. Look, we're hitting a key support line right here,
really
which is really interesting. So it hit the support line on Friday around like $86.
Pre-market, it's up?
And pre-market, it's up. So it's bouncing. It looks like it might be bouncing back off that. So I'd say this is a pivotal day pivotal week for Micron in terms of trend direction.
Take a look at that.
So we want to see if it breaks down below this support line here, or if it will bounce off of it and then break above, 111 right here, right? Or otherwise, could just be trading in a channel. If it starts to move back up towards, the $100 range, might not be a bad idea to sell an iron condor at 110 and 90, like a $10 white condor if the price is at 100. But yeah, will be interesting to watch. I'm sure we'll be talking about Micron over the next couple of weeks.
Yeah, I look at the technical analysis, actually. Scroll down, because it could be a play for me this week. I feel like I was hoping it would bounce back off of it.
Well, I don't think technicals are going to indicate bullish just based off of this chart right here.
Yeah, it's true. Interesting.
But I don't know. We've got to look at the semiconductor industry. We could take a look at this ETF. Looks very, very similar to Micron, right? So, I mean, this is a combination of a bunch of different semiconductor companies. So, something to keep an eye on.
Okay. So, look, overall, I won. I went 4 for 5. Ben went 3 for 5. That is my 4th consecutive victory in a row, putting my record at 4-2. Ben's at 2-4. Just a tough showing. Just a real tough showing for you. So moving forward, so we're going to start doing picks on Fridays. Now, we didn't make picks on Friday, right?
We didn't this Friday, no.
Okay, so we're going to go throughout this week with no picks in.
Yeah, pause. We're going to hit the reset button because we need to pick with live data.
Yeah.
Right.
Are you discrediting my past victories here? I hope that's not what you're doing. I agree that we'll
No, not at all. I think you're good at picking stocks. I do. I mean, your portfolio shows for it.
Yeah, thanks, man.
So there's no disputing that. But I will say, like, if we want a truly fair competition, market should be open when we're making our picks.
Market should be open. That's
going to bring a whole new factor into play too of what if there's a huge price drop between when I'm picking and when you're picking.
That, and then we got the weekend. It's like we're exposed.
Well, that's how we're trading our trend spread strategy.
Yeah, no, we have to. We got to do it. That's how it's done. So we're going to replicate that. We're going to get Thomas in. Thomas is going to be picking live with us. As we were doing 5 picks each, we were given 12 or 13 minutes. We're not going to have that full amount of time for all 3 of us to pick on Friday because we want to get other things done. But we're going to come up with some type of new format. If there's suggestions, let us know. And we'll go from there. So again, a 4th straight victory for Dillon. We're going to reset the clock, give Ben some new hope, and we'll get Thomas involved. So that's PeakBot Picks. You can follow it on our socials, hashtag PeakBot Picks. I just went and posted the results from this week. And if you want to get involved, just let us know. We can have maybe it'd be fun is having like a guest picker on, maybe one of our partners or even a random audience member or a subscriber. Bring them on the live show. Let's see their process. I don't know if Ben's loving this, but anyway.
Yeah, we'll figure it out. We'll figure it out by Friday.
All right. Reminder, Tradier Option Summit, September 18th, 10:30 a.m. Eastern, 1:15 for your boys. Ben, what would we like to do next?
Let's head on over to the watch list and then Dillon, maybe get your portfolio ready to show so that way we can talk about the wheel.
All right. Let's do it.
All right. So I'm going to head over to the watch list for everybody and anybody that's been following our watch list for the past year and a half, 2 years, however long it's been at this point. You would have noticed that the watch list typically has about, 75-ish, maybe a little less tickers on it. We've recently expanded that list, and we've included ETFs on the list. We've We've included more equities, stocks, companies on the list. So you'll notice that there are a lot more tickers on the watch list now, a lot more to choose from, and a lot of different data to make your decisions on. Of course, what we're providing is not financial advice. We're not financial advisors. This is all just information provided to you to help you make your own investing decisions. So let's cover some of this really quick. Quick note too, if anybody has been trading Gap, you might have known Gap under the ticker GPS previously. A couple of weeks ago, they changed their ticker to GAP. Makes sense. I don't know who decided to make it GPS in the first place. Maybe Gap was taken at the time, but their ticker is now Gap.
Okay.
So if you are on the watch list and you scroll, you can see there's just a long amount of scrolling that you can do on this list now. And I'm on our alerts page currently. If you like our strategies, but you're not sure if you trust in automation yet, sign up for PeakBot alerts at alerts.peakbot or alerts.usepeakbot.com. It's just $5 a week. You get access to this watch list. We give you instructional videos on how you can trade our strategies manually. And then once you do it for a couple of weeks, we're confident that you're going to start saying to yourself, all right, why don't I just have a bot do this for me? So I am going to get another screen up. I want to take a look at, I clicked the wrong button here. There goes my screen. I want to look at the watch list on our web app. So let's get that screen back up. So this is my cash flow bot, actually. And I did want to show this off a little bit. Over the last month, I'm up about $1,000 on it. And I'm trading, I don't know, anywhere from 6 to 10,000 on that per week. So it was a really good month for me trading the cash flow bot. Even with being more conservative, a couple of weeks, only trading a couple of tickers just due to some uncertainty. But yeah, the cash flow bot has been really good to me. But if you're in your PeakBot account, and this is what it looks like if you sign up for PeakBot or any of our white label partners, you'll see your dashboard. You'll have an area to set up a new bot. And then you'll have your automated portfolio. You see I've got Walmart and BitX in my portfolio this week. I'm going to add a couple more of those, and I'll probably post my smart spread portfolio on X. But if you go to the watch list tab, this is going to look a little bit different. Actually, sorry, you know what? I can't view it from this one because they have a different watch list.
I have it up.
I'm going to go to my PeakBot account.
I was going to say, or I could pull it up if that's easier, whatever you want to do.
I got it. The reason I wanted to go to PeakBot specifically is because we're showing risk here. And the risk we recently updated to be based off of implied volatility. Now, previously, the risks that we've been showing on the watch list has been based off of the size of the spread versus the stock price, right? If it's a low price stock and there's a wide spread, that's kind of showing that there's a little bit of volatility there, right? Just means that there's a wider variety of strikes to choose from, more uncertainty as to what direction and how far a stock price can go or will go in a particular week. So that's how we were measuring before. However, now we are using implied volatility to kind of be a gauge for that. And as a result, there are much less low risk tickers. I mean, there's still a good amount to choose from. I think yesterday when I looked at our spreadsheet, there was like 37 low risk tickers, probably the same right now. And then you get into moderate, and there's a heck of a lot more moderate now, right? We wanted to trim down the low risk because it's not necessarily all lower risk comparatively, right? Like our sample size is, all of the tickers that we're including in our watch list. So this is just the risk level compared to all of your other choices on this watch list. And hey, it makes sense, right? Like when I'm looking at these low risk tickers, let's go back up here. I could get behind like SPY, low risk, gold, low risk, Dow Jones, low risk, Verizon, low risk, Treasury shares, low risk, Pepsi, go down the
Big
list,
companies.
IBM, Visa. Like these
Big
are all
names.
honestly, Dylan, these are all the tickers that I think your dad would trade,
Yeah,
right?
exactly. Yep.
So
And trades that I want to start. I'm done. This market's too volatile for me. I'm getting boring. I'm about to get real boring with my portfolio.
yeah,
So
yeah.
yeah, I like some updates here. How you have this sorted right now? Is it just the column risk or sort of by
So
risk
on
level?
PeakBot on your automation account at app.peakbot.com, I've got it. The watch list automatically sorts first by risk, so low to high, and then within that risk level, we're sorting by trend. So we're showing bullish first. Not that bullish is better, but we're showing bullish first, and then we're showing neutral low risk, and then we're showing bearish low risk. So it looks like a lot of the lower risk tickers this week, at least,
Or
are
both?
bullish.
Yeah.
Yeah.
We'll have to look at the SPY. I really like that win rate or probability of profit for J&J there.
Yeah, I'm wondering why the SPY is showing up as bullish because I just don't see it. And maybe it's because I think I know why. We're taking the 67-day, and if we look at the past 67-day EMA, and if we look at the past 67 days, I mean we've got this strong uptrend here, and
Yeah.
then we just started to turn down last week, so that curve probably hasn't made its way over just yet.
There could be some support there, Ben. It looks like kind of where we're at
Right
there.
here.
Yeah, could have been
Yeah,
tested.
there could be right around this. What is that? 540 level.
Yeah, which we're
That's
pretty
where
much
that's
at.
right where we closed on Friday. We're up pre-market a little bit. So we'll see what kind of week we get.
Cool. So with that, why don't I can pull up my account and we can take a look and maybe you can verbally go over the updates that we've made to the wheel and what's going to happen if you get assigned shares. How about that?
Yeah, let's do it.
All right. So let me pull up my screen here. Just give me 1 second. So going into last week, I cleared out my portfolio due to my uncertainty in the market as well. Ben, can you see this?
Yes.
Okay. All right. So this is my PeakBot account. I like the dark mode better than the light mode, but to each their own. So last week I was trading the wheel on these two stocks, which we're going to talk about in a second, and I did have two spreads on trend spread on AFRM and INTC. I was bullish on AFRM and lost. I was bearish on INTC and won. But I set those to smart exit, meaning it was going to close the contract instead of rolling it and opening a new one because I wasn't sure what I wanted to do this week yet. So on the wheel, which again is our tried and true strategy, our first option selling strategy, selling cash secured puts, covered calls. Now, of course, we have what we like to call the vertical wheel or the hedged wheel, where we're selling put credit spreads until you get assigned shares. And then we're selling what used to be just a straight up call credit spread. And now we made some adjustments to that to then also sell a protective put, I believe, which Ben is going to explain in a second. So and also an interesting thing that happened to me. So I got assigned, if you take a look at, Ben, did it flip over to my Tradier screen?
Yep.
Okay. So if you see, I got assigned on Cisco, which means I finished the contract in the money. I got assigned my shares. I took a partial loss, but also collected premium. It's an unrealized loss because I still own the shares. So we're going to talk about what's going to happen for me here now, this week, today, when the wheel enters again for me. However, what was also interesting was, and I talked to Thomas about this, Ben. I want you to confirm. My Bank of America, I don't quote me on this, but I believe my sold put was 48.50 or something. I could be wrong, whatever. But the point is, I finished right at my strike price, not below it. So I did not get assigned my shares of Bank of America. I was technically out of the money because I wasn't in it. Does that make sense?
Yeah, it makes sense. And even if you were in the money, you might have what they call skated by, right? And we talked about that with Matt Cashman a couple of weeks ago when he was on the show. There could be time, very rare, but there could be times where your contract is in the money at expiration and you don't get assigned shares. Again, super rare. I think in my 13 years of options trading, that's only happened to me twice. So it's very rare. Could happen, and when it does happen, it's great, right? You get to keep all of your, unless you want the shares, right? If you're selling puts because you want the shares, then yeah, maybe you're a little bit bummed out, but then just sell them at a different strike price, better strike price for you in the coming week, and collect more premium, and then get assigned shares at a better price. So,
So what we're going to do now, Ben, why don't you explain what used to happen when you got assigned versus what's going to happen now on the wheel?
Okay, cool. And I've got Cisco's options chain pulled up on my screen here. So let's just remember. Yeah, let's just remember, Dylan, you were assigned at 48.50, right?
Yep.
Okay. So previously, what the bot would do for you is it would sell the closest to but less than the 50 delta, and then it would buy the closest to but less than the 20 delta. So the setup would have been like this. It would have sold the 49 strike. So still giving you a chance to make a realized gain on your shares there, Dylan, because you were assigned at 48.50, but the sold call is at 49. So you could have earned $50 potentially, right? And then we would have bought the closest to but less than the 20 delta, which would be this strike price here, $50. So that would have created a call credit spread. We would have earned, it looks like 31 minus 9. We would have earned about 22 cents in premium, so $22 per contract. And this bot call would allow Dylan to participate in upside. So if Cisco, for some reason, went bananas this week and went up to like $52, just as an example, his shares would be called away at $49. And again, he would make the $50 because there's a 50-cent spread between the strike that he was assigned and the strike that his shares got called away at. And then he would make money off of this bot call because he's buying it for about, okay, I was looking at these numbers differently before. We would earn about 28 cents. No, 21 cents. He would have bought at 10 cents here. And if the price was at, if the stock price was at $52, well, there's $2 of intrinsic value there, never mind extrinsic value. So Dylan would, he would see a huge gain on, that 10 cents that he spent on the $50 strike. He would make, about, at least that's over 1,000% there. So would have been a great gain. That $10 would have turned into like $250 or so. So that's how we used to do it, right? Now, after getting a lot of feedback, and we're always listening, right? We're always listening to what our community is telling us. What do they want to see in automations? What do they want us to change? And there was an overwhelming ask for us to change this side of the wheel strategy in particular. People weren't so interested in collecting more as stock prices went up. So we were actually asked, hey, can we remove this bot call? And can we replace it with a bot put? And we would do that to protect ourselves from further downside. So instead of allowing us to participate in upside, the preference was let's protect our capital and let's limit further downside. Because what was happening and what could happen in this case is you're going to collect more premium because you're going to be selling a strike that's closer to the money. But if the stock price plummets, the exact opposite of the scenario we just talked about, if it goes up to 52, if the stock price plummets, let's say it goes all the way down to like $40, well, you're holding shares at 48.50. You only collected $22 in premium, $21 in premium. That's not giving you too much protection to that downside movement that just happened. So what we do now instead is on the call side, we will sell the closest to and less than the 30 delta. So we're looking at our deltas here. Here's a 36. That's over it. So we go down to here, the 22 delta. So we would sell the 49.50 strike. And Dylan, that's going to give you, and this is a real life scenario right now, that's going to give you an opportunity if Cisco stock price goes above 49.50 by the end of the week, you could sell those shares for a realized gain and make $100 there. Yep. Per contract that you have. So that's the first part. Now what we're doing is what's called a combo spread. So we've got a call side, call strike, sold call. And then on the put side, we're going to buy, just like the put side of the wheel strategy, we're going to buy the closest to but less than the 10 delta, which here's the 8, here's the 12. So less than 10 is 8. So we're going to buy the $46 strike. So we're going to pay 7 cents to do that. We're going to make 15 cents to sell this call. So overall, this trade will get us about 8 cents in premium. But we're giving ourselves the opportunity to make $100 in realized gain per contract by selling a strike that's further out of the money. And then we're protecting ourselves from downside by buying the $46 put. So the most Dylan could lose is $48.50 minus 46. That's $2.50 per contract. So that's $250, right? And that's the chances of that actually happening based on the delta statistically are 1 in 10. So I like the odds there, right? I like the odds. I like the protection that this is giving you now. I like these changes. How do you feel about them, Dylan?
I feel good because I'd rather play defense than offense, right? That's what we were doing with the bought call at the 20 delta with that spread. We were playing offense, hoping that in the off chance that the ticker was to gain what we would say typically roughly maybe 10% that week or whatever, we would then really cash in on that bought put. But it wasn't happening all that often for a lot of what we're doing. But I like playing defense here. I think it's going to limit our losses. And with a volatile market, I do like these changes. So I think that kind of wraps it. We were going to take a look at my portfolio, but I'd rather just kind of take my time with it, put it out on socials. If you guys want to see what selections I'm making this week, I'm going to keep going with my Cisco on the wheel as we're talking about here. And I'll probably hop in on 1 or 2 trend spread bots. I'm going to reactivate some of my capital this week. I'm not as tense as I was going into last week. Ben, anything else you got?
Nope. Let's wrap it up.
Awesome. Well, appreciate everybody tuning in. We will be live again tomorrow on our own socials, not with Tradier Hub, 8:30 a.m. Eastern. We'll also be going live again on the Tradier Hub and our socials Friday, 11:55 a.m., just before noon. We're going to be making live picks with Thomas, with real data. So appreciate everybody tuning in. And as always, thank you. We'll see you at the peak. Have a good one, everybody.
Capitalize on stock market uncertainty this coming election. When most see disaster in the headlines, informed traders see dollar signs. Elite traders have embraced market fear for decades, and now you can too. Join us at our exclusive Fall Tradier Virtual Summit, sponsored by SIBO, on Wednesday, September 18th, 2024 at 10:30 a.m. Eastern Time. Claim your seat at summit.tradier.com before registration closes.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.